For this video, I want to go through a sample Georgia Form 500, which is an individual income tax return. And this return can be filed for residents, part-year residents, or non-residents of Georgia. And in this example, we're going to look at a part-year resident return. So our taxpayer here started the year off living and working in Georgia and then moved to Florida. So we've got the Georgia Form 500. We've also got the taxpayer here, Emily's federal Form 1040. And then we also have the Georgia Form instructions for the year. And we're going to need to reference these to look up the tax tables and calculate the amount of tax on her Georgia source income. And then lastly, we do have just two slides here covering some background on the fact pattern that we're going to be looking at, and then also some notes on Georgia part-year resident returns. So if we start with the fact pattern here, and then we'll get into the filings themselves. So our taxpayer here, Emily Q. Taxpayer, she's a single filing taxpayer and resident of Florida as of the end of the year. She started the year living and working in Atlanta and then moved to Florida on April 1st, 2022 after accepting a new job in Florida. All right, so she's leaving the Atlanta-based one and then taking a new job in Florida. So during those first 3 months that Emily was a resident of Georgia and working for Company A, she was paid $30,000. And so at the end of the year, Company A gave her a W-2 showing $30K in federal and Georgia wages and $1,725 of Georgia state income taxes withheld. Then, moving on to Company B in Florida, Emily was paid $117,000. And so that W-2 shows all of it as just Florida wages because that's where she's living and working. She's no longer having any connection to Georgia. Now, for investment income, she had a bank account that paid some interest of $305 and a brokerage account that paid out qualified dividend income of $950. And then she also sold some stocks during the year, which resulted in long-term capital gains. And so the worksheet we see down here is a summary of the investment income and when everything was paid out. Now this is important because when you're a part-year resident, the investment income, you basically record it when it was accrued and paid out to you. So for example, if we look at the interest income, she looked up the amount of interest that was paid and deposited at the end of each month, right? So the bank account pays out the interest monthly, and so we can see at the end of each month what the amounts were. So for Georgia part-year residency purposes, she would only be recording the interest income in Georgia for when she was actually a resident there, right? And the same goes for the dividends and the capital gains. So the capital gains weren't sold until October 2022 and December, and so that's clearly being realized when she's a Florida resident, so Georgia is not going to get any of that either. All right, and so the summary down here shows, okay, what amounts are paid while a Georgia resident, what amounts were paid as a Florida resident, and so this will help us complete the Schedule 3 on the Georgia return. Okay, so if we go to actually let's go back to this slide just to cover some of the key points here. So non-residents, part-year residents, again, they do the Georgia Form 500 just like a full-year resident would, but we add a Schedule 3 which is completed for part-year and non-resident taxpayers. And so on the Schedule 3 is where we have 3 separate columns. We have basically a total column for federal. Then we allocate a piece that's not taxable in Georgia, and then column C is what is going to be considered Georgia income. All right. Now the deduction here, if you're a part-year resident or a non-resident, you can still claim the standard deductions and personal exemptions, but it's going to be a reduced amount. And so the deductible amount is reduced based on that ratio of your Georgia income compared to the total income, and we'll see that calculation when we look at the Georgia return. So if we start with the federal return here, go through this kind of quickly, and then we'll move on to the Georgia 500. So we can see here on line 1A, this is the total of all wages she earned during the year. So that's Company A and Company B, $147,000. And then we can see the totals for all the investment income. So total amount of taxable interest, qualified dividend income, and then the long-term capital gains that was reported on the 8949 in Schedule D. So once you have your federal return completed, then it's a matter of, well, what gets allocated to Georgia and what does not. So we have the Georgia Form 500 here. We'll cover the first page, and then we'll look at the Schedule 3. So the tax year for individuals is generally just the calendar year. So year January 1st through the end of the year, December 31st. Georgia does ask for identification, right, on generally your driver's license. So Emily here has a Florida issued driver's license. Put down the driver's license ID, first name, last name, social security number, and then a contact address for Emily in Florida, right? So her new address. Now the residency status on line 4 here, she's indicated number 2, right, because she is a part-year resident, and then added the dates where she during her residency period. So January 1st up until April 1st, and filing status is A, so single filing taxpayer, and then the number of exemptions, she gets 1. So 1 exemption. If you had if you had a spouse would get 1. If you have dependents, list the dependents. Dependents can get you additional exemptions as well. And going down to line 8, federal AGI, so 151,106. We can find that if we go to line 11 on our federal return, right? This is our adjusted gross income, line 11, 151,106. Now for part-year resident returns and non-resident returns, you do not complete lines 9 through 14. So these remain blank because we need to use the Schedule 3 instead to figure out these values. So let's go to Schedule 3. Now Schedule 3 for part-year and non-residents, and a reminder here, do not use lines 9 through 14 on pages 2 and 3, right? Use this instead. So on the far left, column A here, we have federal income after any Georgia adjustments if needed. So this is completed as if you were a full year Georgia resident, right? So you're reporting all your wages, all your investment income. Now total adjustments, if you have any items of income or expense where there is a federal to state difference. So for example, municipal bond interest is a very common one where it won't be taxable at the federal level, but it could be taxable at the state. You might have an adjustment there, but in Emily's case here, she doesn't have any of those adjustments that need to be made. So these amounts in column A line up exactly with her federal tax return. Now, income not taxable to Georgia, and then Georgia income. So this is where we start to allocate the amounts based on our residency, what's going to be taxable in Georgia and what's not. Well, the wages is the easiest one, right? In this case, because the $30,000 she was paid at Company A, that was all paid and earned while she was a Georgia resident. So all of that is Georgia income. And then the salary from Company B while she was in Florida is all going to be income not taxable to Georgia. Now the investment income total amount was $1,255, and so we have the interest and dividends split here in accordance with what we had on our worksheet. Right, so we've got the $74 in interest, $237 in dividends, so that's the $311 figure is interest and dividends earned while in Georgia, so while a Georgia resident, and then the difference there is all going to be basically attributed to Florida. Capital gains are included in line 4, other income or loss, and so we can see here all $28.51 a capital gain is just being apportioned to income not taxable in Georgia, and line 4 in the Georgia column is 0. So we have our total income, add up lines 1 through 4, so $30,311. Now the remaining lines here is where we calculate, okay, how much of a standard deduction do we get? How many exemptions do we get? Again, assume kind of as if you were a full year resident, and then we reduce it based on the percentage of Georgia income to the total. So the ratio here, line 9, we want to divide line 8, column C, by line 8, column A, right? So divide 30,311 by 151,106, and we get 20.06%. So now we have the standard deduction for single filers, $5,400. We have one personal exemption. So the total deductions at this as a starting point is $8,100. The $8,100 times 20.06% leaves us with $1,625. So the $1,625 is the amount of deduction that she can claim against the gross amount of Georgia income. So $30,311 minus $1,625 gives us $28,686. Now once we have that result, we can go back to line 15A on page 3. Right, so 15A, page 3, we enter the amount of income there, $28,686. We don't have any Georgia net operating losses, so her taxable income in Georgia, $28,686. Now we calculate how much tax she needs to pay. So $28,686, we go to the Georgia tax tables. So the rate schedule here, single filing taxpayer, and our income is over the $7,000 figure. So the tax is going to be $230 plus 5.75% of the amount over $7K. So if we get out the calculator here, $28,686 is the amount of income over the $7,000. So we have $21,686 times 5.75%, and then we add the $230. So the total tax, $1,476, round up to $1,477, and that's the amount of tax that Emily is liable for on this amount of income. Now she doesn't have any credits that are applied there. The amount of withholding we still need to account for. So the income statement details here input the information from our W-2 that shows the amount of Georgia wages and Georgia tax withheld. So the $30,000 here from that company A, the amount of withholding they took out of her paycheck for Georgia tax purposes was $1,725. And so we can see line 23 here, the total amount of Georgia income tax withheld on wages, so W-2s and or 1099s, $1,725. So now line 29 here, so the amount of taxes withheld exceeds our taxes owed, right? So if line 27, 725, exceeds line 22, which it does, subtract 22 from line 27 and enter the overpayment. So this $248 is the amount of overpayment, and this is her refund. Now she's decided to not have any credited to estimated taxes. She's not having this be donated to any of these funds or programs. So she's just going to get the $240 as a refund based on this filing. So that covers it for this video. I hope that was helpful. If you have any questions, please feel free to leave a comment below. And as always, I look forward to seeing you again on the next video. Thank you.